gives me great pleasure as always to bring on board Sunil D'Souza of Tata Consumer to talk about things for the quarter gone by, how things are progressing for Tata Consumer, and after those two big acquisitions, how things in a sense are likely to pivot for Tata Consumer going forward. Mr. D'Souza, always a pleasure to have you on ET Now. Thank you for joining us.
Thank you, Nikunj. My pleasure.
Let's first talk about the highlights for the quarter gone by. While there seems to be a pushback by a lot of brokerages for the quarter gone by, you think one should not mistake the last quarterly performance as some kind of an indicator of what lies ahead?
So Nikunj, just to give you a snapshot of what happened in the quarter gone by. Overall, organic top line grew by 5, total grew 13. Several positives there. Salt market share is now on a MAT basis plus 150. Sampann continues plus 26% growth. International is now on the party, both on top line and margin. And our two new acquisitions, which you talked about, Capital Foods crossed 200 crores for the quarter. Organic India crossed 100 crores, delivered substantial accretive margin, and grew 30% quarter on quarter. So that is well on track. Couple of negatives, both volume and margin pressures on ready to drink and packaged beverages. Packaged beverages because of the cost of tea going up. Ready to drink because of some competitive pressures. So that was the thing. EBITDA grew 11%, but between EBITDA and group net profit, which grew only 1, several moving parts out there. A is our brand amortization because of acquisitions is up by about 55 crores. Last year we were cash positive, and therefore this year now with the rights issue is now cash positive. So net swing on interest income by about 90 crores. And a one-time benefit on tax because remain on track fully on the financial metrics, working capital down 1, and your point about ROCE. ROCE versus same quarter last year, if I take out the acquisitions, up 80 bips. Strategically on track in terms of outlets, 1.6 million, A&P 7.5% in India. Channels of future, modern trade up 17, e-com up 50 plus, and we're building out new channels of food service and pharma. So yes, a bunch of moving parts, slightly tough operating environment, but I think it was a decent result.
Why was the environment tough per se? Because inflation actually trended lower for the quarter gone by. So why was the environment tough for you?
So Nikunj, yes, on the headline inflation, if you look at it, was softer. But what we have seen is while rural has picked up, there is stress on urban. And it is my feeling that food inflation is probably hit hard. That's number 1. Number 2, there is a significant movement on festival dates last year versus this year. Number 3, also unseasonal rains impacts both out-of-home businesses as well as stocking up for salt, etc. So bunch of stuff, can't point out to anything, one thing specific. That said, October has started off well, so I'm keeping my fingers crossed saying we will have a good third quarter.
Can you confirm to us that you've taken a hike in salt and that is going to be a significant change for Tata Consumer's current quarter because of that price hike?
Nikunj, the reason why we've taken the price hike is we've had a record rainfall in Mithapur, which is where we produce our vacuum evaporated salt. I think the highest rainfall recorded since 1929. And because of that, we had a shortage of brine and therefore needed to buy brine. And therefore, the price hike is more to compensate for the cost increase. I don't think you'll see significant movement on the margin front. On the packaged beverages front, in tea, while costs have gone up 30%, we've taken gradual price increases. Keeping the consumer in mind. Second is keeping competitive dynamics in mind. So that there will be a bit of a margin pressure, but we remain focused on maintaining market share and continuing volume momentum.
But when will the tea portfolio come back? Because that is critical for Tata Consumer's overall kitty, because that is the largest contributor for you. Prices are going higher. You're not taking a price hike. HUL is not taking a price hike. Is it a price war at play now in the tea space?
I wouldn't say it's a price war at play. We have started taking gradual, we've probably taken 30% of the cost we have passed on to consumers. Uh, Normally, you wouldn't want to shock the consumer with a very steep pricing at one shot, and therefore you would see graduated price increases, different across geographies, different across pack prices.
I can understand that there were pulls and pressure for the rural demand. There were inflationary pressures which were visible. But if I may just bring out even the Starbucks portfolio, very soft quarter, both in terms of growth and also in terms of store addition.
So Starbucks overall, I would say, Nikunj, the growth is more or less in line with the trend that we are seeing in the overall coffee store segment. In fact, I think we are on par even with the Indian store operators. The multinationals, I would say we are slightly better than all of them. Overall, the QSR segment itself, I would say mid to high single digit negative, and it is a lot to do with traffic. While spend per what we call ticket size, once the consumer has walked in, has remained constant, the whole issue is the number of people walking in. I think we have seen a soft quarter. And like I said, we've seen a shift of festival days, Shraddh coming in into end of quarters, and I'm hoping, therefore, that we will see a better Q3. That said, we will not take off the pedal on our store openings because we remain focused on the long-term opportunity in India. That's number one. Number two, apart from that, we have taken some actions to spur traffic coming into the outlets. We've introduced something called a classic portfolio. If in some ways it is a value portfolio, the coffee and food is slightly different, but it is a value proposition to pull in the consumer who's probably feeling a bit of stress at this point of time.
So, which are the categories you think will come back in this year itself, and which are the categories where you think the revival will be pushed to next financial year?
Sorry, Nikunj, I didn't get the question.
No, which are the categories of your portfolio where you expect the comeback could happen in the current quarter and in Q4, and which are the categories where the comeback in your portfolio could be delayed to next financial year?
So, Nikunj, overall, I would think in the portfolio, from a volume momentum perspective, Q3 should be better than Q2. On a margin front, I would say the only place where you will feel the pressure would be the beverages, both packaged beverages and ready to drink. Like I said, packaged beverages, because we've re-indexed our pricing with regard to competition, A, and in packaged beverages to do with the cost of tea and not passing on the entire price to the consumers. But on a volume perspective, I would think we would be better off in Q3 itself.
One big hallmark for Tata Consumer is the innovation. Innovation, both in terms of the original portfolio category and innovation after the categories in which you've entered or you've done acquisition. How much of a portfolio you would say is now coming from this innovative category? Because I would imagine that in the innovative category, your margins would be substantially higher purely because of branding and the kind of products you have.
So Nikunj, first of all, in two pieces, right? In the overall portfolio, Capital Foods and Organic India, once they came in, we had guided the street to say 30% of our portfolio would be growth. Last quarter was 29, so we remain on track. A, B, as you rightly mentioned, the margins on the newer categories are significantly higher. In fact, if you do a standalone EBIT, Capital Foods has delivered a 50% growth in EBIT. Organic India is a multiple of last year's EBIT, right? So from that perspective, it's positive. But even on the base portfolio, we continue to be focused on innovation. We had said about 5 to 6 is the good number. 5 to 6% of your sales coming from innovation is a good number in the food and beverage space. For the year to date, we are at about 4.5%, and remain on track to cross a 6%, 5.5 to 6% by the end of the year.
Why are we getting, Mr. D'Souza, very mixed picture from the FMCG industry? There are companies like Dabur which spoke about rural recovery. There are companies like Nestle which are struggling in the food category. Why are we getting multiple trends within the FMCG space and everybody has a different story to share?
So Nikunj, I wouldn't comment on the rest of the companies, but all I can tell you about what we are seeing overall. Like I said, we are seeing rural demand starting to pick up, albeit it is not in the double digit that we would have expected it to. I think overall a good monsoon, MSPs, in place, I think has started to revive the rural space. On the urban front, like I said, I think we are underestimating the effect of food inflation, and the shift in festival dates, and therefore the pressure. Like I said, October has started off well, so I remain bullish about Q3 and Q4.
You mentioned that rural demand is coming back. That is good news. But what about urban demand? Does that run the risk of softening further? Because if one comes back, other one softens, then it's net neutral.
No, you're absolutely right. So, a couple of things out there. I mean, I cannot influence overall consumer sentiment or spends. So, all I can do is execute to our best of our abilities. Like I said, because overall general trade is soft, we have focused on the channels of the future. Modern trade for me was up close to 20%, e-commerce was up close to 50%. We are developing new channels to make sure that we can overcome this urban stress. We were never present in the chemist stores. We were never present in food service. So we're trying to develop that to continue. And like I mentioned earlier, innovation remains a big thing to get the consumer excited. We remain maniacally focused on market share because while softness will come and go, in the longer term, market share is the true determinant of the strength of the company, including pricing power and market standing.
Okay. Now, you've done an extraordinary job of improving your return ratios and ensuring that despite acquisition, your margins and your ROS remain strong. But given that there is a sudden slowdown which has hit the industry, an unexpected headwind which has come from rural demand, do you think in the near term you'll have to get much more price conscious like you become in the tea segment, and that will have an impact on your return ratio? So the trajectory of quarter-on-quarter improvement now will get stalled in other metrics also?
So Nikunj, I would say we remain focused on growing the metrics as we had earlier guided 50 to 100 bips of EBITDA percentage increase every year. We remain quite bullish, saying that we will be able to deliver in that ballpark even this year. In fact, despite the tough environment, this quarter was the same quarter last year. We are up by 80 bips on the ROC. So as long as we remain focused on controlling the capital, making sure that we continue to get growth and get growth profitably, I don't see this thing. Quarter to quarter, there might be a moment, but on a yearly basis, 50 to 100 bips, I think we would be there.
I said that really is the inside story for investors to focus on. While we may talk about rural demand getting sluggish, competition in tea getting intensified, the story is that despite these multiple headwinds for the quarter gone by, you're still maintaining your guidance of return ratio improvement. So FY25, the health of the balance sheet, which is what eventually long-term investors they look at, will only get better despite the slowdown.
Oh, absolutely, Nikunj. I would not doubt that, for the simple fact that we are in the food and beverage business. So that is not, I would say, going out of fashion anytime. Number two, our portfolio is now well balanced. Now, actually speaking, I've got, say, four solid legs: tea, salt, growth businesses in India, and international, all almost four equal legs. I've got very, very clear focus on what we need to do. We need to bring focus volume growth in salt. We need to take graduated price increases in tea. We need to bring volume and innovation back into ready to drink and build momentum for Capital Foods and Organic India. We have got categories of the future. We've got categories of today. Focus on execution, whether it is distribution, marketing, innovation. So I would not doubt our ability to continue to outperform in the longer term.
Tea is one space where Tata Consumer needs no introduction, largest and biggest. Which are the other categories where in next 2 to 3 years you aim to be number 2 or number 3?
Sorry, Nikunj, I missed your question in the initial part.
Okay, my question, Mr. D'Souza, is that just like you have a dominance in the tea category, which are the other categories where you aspire or you aim to be number 2 or number 3 in 3 to 5 years?
Ideally, Nikunj, if you ask me my wish list in every single category/portfolio that you play in, we should be in the top 3 segments. So we are focused on that across the portfolio, and not only in India and international as well. I'll start with international. In tea now, we are the number 2 in UK. A couple of years back, we were number 4. Canada, we remain number 1. US is now solid, starting to come back. In India, in our tea and salt, of course, we're number one. Tea, we are a close number two. In the Sampan portfolio, very, very clearly, pulses, we are going from strength to strength. Dry fruits have started off very well. Soulful is a close contender in breakfast now and expanding into many other categories. Capital Foods, of course, I mean, they are market leaders in the segments that this thing, Desi Chinese, I think Capital Foods more or less owns that segment. The catch is to grow the categories there. It's not about market share. And Organic India, again, I would say we would aspire to be number one in that space nationally.
If I could just pivot the point further to international businesses. Now, what is the big trend there? In India, it is rural versus urban, it is urban versus semi-urban. What is the trend in your international business?
In the international business, Nikunj, I think it is not a question of the trends. The question is what we were doing with our controllable metrics. So in the UK, we put quality back, we put execution back, we put brand power back, and executed very well in store. And we've seen that come back. We were missing the boat on fruit and herbals and specialty, and we were focused on black. Just as a perspective, out of our 17.3 share now in the UK, only 15 is Tetley. 2.3 comes from Tea Pigs and Good Earth, which play in fruit and herbal and specialty, and they're growing extremely well. In the US, we've introduced Tea Pigs. It's the fastest growing brand out there. So it is a question of reading what was there, where black tea was flat to moderately declining and fruit and herbal specialty coming up. So we've taken advantage of that. The consumer is focused on sustainability, so we've adapted our packaging there. We did not have quality up to par, we bumped it up. And with that, we've had put in A&P and taken pricing as well. And we've got a team which can execute.
Are there any other categories where you think that there would be significant headwind in terms of pricing going higher, but companies unable to pass it on? And I'm using tea as a reference here because, you know, the normal logic is prices go higher, companies, they hike prices. But in tea, despite a 30% hike in prices, that has not happened. It clearly means that either consumers are not accepting it or companies are reluctant and they want to protect their market share. Any other categories where this factor is at play?
So a couple of things, even on tea, Nikunj, I mean, normally companies carry inventories. So while I'm talking of 30% is the here and now, in quarter one, we were carrying in inventory from the last quarter. Opening this quarter, we were carrying inventory from, again, Q1. So it takes a little bit of time for the pass-through effect to happen. And therefore, I would think ultimately costs will get passed on. But I don't see any other category excepting, okay, so ready to drink beverages, there is a new player in town who's trying to play the pricing game. We were late to the party in terms of correcting prices, but that's not to do with the commodities. That's to do with the competitive positioning. And I remain confident that Narishco ready to drink, our volumes will come back. But there will be a pressure on margins.
Mr. D'Souza, there are a couple of ways we can look at any company's performance. One are because of external factors which are not in your hand. One are factors internal control which are in your hand. On internal factors, I just want to establish this point for our viewers. The company is done exceedingly well. Cost management, Mr. D'Souza just mentioned that return ratios, despite this change in the demand setup, will continue to improve for the full year. The new acquisitions, what they've done, they're getting fully integrated. Those are internal factors where they're doing very well. But external factors, Mr. D'Souza, are not in your hand. When do you see external factors changing? Like rural, you said, has already changed. But what about other external factors which are at play?
See, Nikunj, I cannot forecast the future. All I can say is exactly like you said, focus on the controllables and execute to that. Like I said, the most important things for us to do is get volume momentum back into both packaged beverages and ready to drink. And in packaged beverages, make sure that we're taking gradual price increases to make sure the margins come up to par. I think that would be the biggest focus. We remain quite confident that with the distribution, with the innovation, with the A&P firepower, we are well positioned in the market. And as demand comes back, even in the urban space, we will be riding the wave.
You've been on an acquisition spree, Mr. D'Souza. new categories, existing brands, you've innovated new categories. Can I say that in the blueprint of Tata Consumer 2030, 80% of your acquisitions are already done, and now what you would be acquiring pretty much would be the peripheries, but in terms of the main pillars, the four pillars which you referred to, they're already in place, and we should not expect large acquisitions from you of the size of Organic India or Capital Foods?
So let me say, Nikunj, we've always said we will grow both organically and inorganically. B, we will be one of the premier FMCG companies in India, and we've not done by a mile. We've got a long, long way to go. So this strategy remains intact. The only piece I would say is right now in the short term, we are focused on delivering value with the Capital Foods and Organic India acquisition. We owe it to the board and the shareholders to make sure that we deliver the business case here. And once that is done, there is no reason if there is a good opportunity outside, we will not look out.
Do monsoons play a large role in the categories which you represent? Because this year monsoon is better, and it's after a gap of 3 years. We are in for a good monsoon. The checks are indicating that it is going to be a good harvesting season. How important is that for you?
So Nikunj, it is important with two aspects. Okay, A is monsoon affected us negatively during the quarter with the flooding in a lot of our strong geographies. But a good monsoon overall does impact because whether you like it or not, a significant proportion of India's population still is dependent on agriculture and agriculture dependent on monsoon. So a good agriculture and decent pricing for the crops does mean spending power in rural. The good part is my market share opportunity is in rural, semi-urban and rural. That's where I need to grow. The good part is I have put distribution in place. We have expanded our super stockist network across the country. We've got now close to around 500 super stockists. We've got close to around 9,000 sub-distributors in rural areas. So when the economy comes back, given the fact that we've got brands, products which are priced right, and spending power in the rural economy, I think it plays an important role in the overall growth for us.
How large is quick commerce for you? If the quick commerce portfolio grows, is that good news for you? Is that bad news for you? Is that higher margin growth, or is that a comparable growth?
So e-commerce growth, if you calculate including the cost of visibility, which in my mind is A&P, then it is slightly negative on the margin front. But if I strip that off, it is in the ballpark. It is not way off, number one. Number two, we remain immensely focused on e-commerce because we do think it is the channels of the future. Today, e-commerce now accounts for 14% of my portfolio, and it has been growing at 50%. Quick commerce is now, I would say, growing at 100% plus. And if the consumer is gravitating there, we will be there. I mean, I can keep doing my calculations on margins, but if I do not go after the consumer, there is no margin, right? As simple as that. So we will remain focused on that. I do think the team is doing a good job because while we are overall number 2 in tea, for example, on e-commerce, I'm number 1, which means if I put my distribution in place on the offline piece as well, my brands have the pulling power to pull me to number 1.
Okay. Just two follow-up questions, Mr. D'Souza. This one is a repeat of what we initially addressed, but I don't want to get this one wrong. If I say that the quarter gone by for Tata Consumer was not a great one, but that was largely because of external factors. And in those external factors, which is both urban and rural, tea prices or headline inflation having impact on margins, you think that the challenges which were there for the quarter gone by, which is July, August, September, they are fading away. So in terms of a demand, you are reasonably confident that the worst is behind us. Would that be a fair summary, sir?
I would say definitely. Nikunj, I would say Q3, Q4 should be definitely far better. I mean, we delivered a 5% organic growth in the last quarter, but we always try for a double-digit growth. So I would say from here on, you will only see improvement quarter on quarter.
So I have a thought that India's GDP is growing at 7%, nominal GDP is growing at 11-12%. Is 5% volume growth good for a company like Tata Consumer? I mean, the products you have, you should be growing certainly above India's GDP and, in and around India's nominal GDP.
Well, absolutely. Nikunj, I couldn't agree with you more. As I said, organically, we need to grow double digit. I mean, forget the acquisitions. that should be adding on top of this thing. So the whole objective of driving distribution, marketing, innovation, everything is to make sure that we're riding the category growths and more importantly, gaining share in fast growing categories as well.
Organically to grow in double digit, which is almost double because your last quarter growth was 5%, you think it's not tough. It may not happen this quarter, it may not happen this year, but it is something achievable. It is not out of the realm of possibility. It is something which you think with your current management team, you will be able to achieve sooner than later.
Well, absolutely, because like we said, salt and tea should be mid to high single digits. Our growth portfolio is now 30% of our mix, and we expect to grow at 30%. And international will be mid single digits. So even if you put all the numbers together, we'll be close to double digits very quickly.
Spend a lot of time because I just wanted a lot of clarity on a lot of things which unnecessarily tend to bother the stock market. Oh, growth, slow down. Bhai, aisa kuch nahi hai. You know, I always say that with a company like Tata Consumer, give them time. Internal factors they can control, which is quality of company, distribution, cost management, brand, A&P expenses. External factors they can't control, and Sunil feels that they will also come back. So, Mr. D'Souza, final question. Every time I interact with you, the shelf behind you changes. The chair never changes. I think the printer, the white printer does not change, but the products on the shelf changes. Next time, what should the shelf contain?
All I can tell you, Nikunj, next time you'll probably see 75% of the shelf being totally different. 6% innovation to sales ratio. This is what happens.
All right. It's so wonderful to have you. Wish you a wonderful year ahead and best wishes for Diwali from Team Etina.
Same to you, Nikunj. Thank you very much.
And by the way, sir, I forgot to tell you, it's always Tata Coffee for me when I start my day, holding the cup with a Tata Coffee tea inside.
Thank you.
Thank you very much.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.